Welcome back. Well, it's time we get you some trading ideas and trading direction. Dr. cknarayan, Managing Director of Growth Avenues, joins in. Good morning, Dr. Narayan. Well, what's the sense you're getting of the markets today? Is it a deep cut? Going by the fundamental news in the ambience in which the markets start trading today?
Well, I think the market has clearly shown its hand in the previous week, as it were. We seem to be having a repeat of what we saw in the month of December, only with probably lesser venom. If you recall, December we had about 7 to 8 straight sessions down. Even in this month we are seeing now the last 6 sessions in the Nifty and the last 7 sessions in the Bank Nifty have all had successive lower lows. The only difference being that this time the fall has been led by the banks, and in its wake the Nifty has fallen. But alongside there has been a clear shift into the IT pack, because the last 7 sessions have also seen the IT index hitting new highs. So clearly the market is undergoing a shift in preference. We may have a little further nudge to the downside from the news that has emerged, but I think having gone down for about 7 straight sessions, hit down somewhere around 86.60 on the Nifty spot, probably we should be starting somewhere much lower, 8600 perhaps today on the spot Nifty. The Bank Nifty is set to hit some supports about 100-120 points below where it closed on Friday. The Nifty likewise should probably also hit some supports around 8550 on the spot and about 8600 on the futures. So I don't really expect a substantial caving down after a softer open. I don't think there have been too many built-up positions on the short side. If you look at the options layup, that also does not betray any kind of significant nervousness. So I don't believe too much positions was really built up for the Delhi elections or for any other sets of events. So soft start, yes, but a large decline, perhaps not.
What is that support level? I mean, for a long time clung to 8,700. Both 8,700 and 600 seem to come under threat last week. What can you cling to as a decent support level, or if you're a Nifty trader?
See, I think you can take some clues from the options market. People typically play the upside in the market through short puts. And if you look at the data as of now, as of Friday, you will find an even distribution in the 85, 86, 87 strike puts. They're all in the region of about 48 lakh shares. Now, 48 lakhs is not a very large number to create a very, very strong base. But then since it is distributed across 3 strikes in similar number, I would imagine that the market punters, the more cognoscenti among them, are not really betting for any index level which is significantly below 8600. So somewhere between 8550 to 8600 on the futures is where I would expect the worst case scenario to be.
Okay. Dr. Narayan, hi, morning. You were talking about the IT space. In fact, last week, HCL Tech and Wipro were all up about 6 to 10% apiece. What stocks would you take positions on this week?
I think if you look at it from the perspective that the sector index has been charging upward and showing a completely divergent trend from the overall market, which is typically ruled by Nifty and Bank Nifty, it's very clear that there is a shift of focus to all the stocks, all layer of stocks within the IT space. HCL Tech, I think, clearly surprised the street with the results. Tech Mahindra has been doing likewise. I think Infy as a leader is now kind of taking hold, because in spite of good results from Cognizant, TCS did not really make the chart. So I think Infy has actually grabbed that mantle, and I would definitely concentrate on Infy as one of the stocks to go up. And I think the bullishness that is visible in the sector index may actually spill over into the mid-cap stocks in the space itself. So IT is a space I would hunt, and I would definitely keep my focus on Infy, Hexaware, and perhaps Tech Mahindra.
Okay. Dr. Narayan, what are the levels you will watch in the Bank Nifty, and is there anything you will play in the short side?
Well, the banks are certainly meeting with selling, and this is true for most of the public sector banks, and in particular in private sector we saw clear selling emerge in ICICI Bank post the results. But the other private sector banks like Axis and Yes and IndusInd have not really seen any kind of selling emerge, maybe some light profit taking, that's it. So Bank Nifty, I feel, will meet with good supports around 725, 750 zone, which is not too much on a downside from where we closed on Friday. So I would perhaps expect that if that were to come down and the Nifty finds its feet, then perhaps across the rest of the week, it could even be the banks which could be on a recovery mode, and the banks could actually power the Nifty up a bit during a recovery phase. Now, I don't believe we are going to get into a significant recovery space like we did back in the end of December. That's because there are too many, let's say, imponderables which are there in the air at the moment. We got macro data coming out. We got this Delhi election results coming out tomorrow. We have the budget ahead of us. That's more of hope and sentiment. So I think what we'll do is, even if we do hit a bottom in Bank Nifty or Nifty, we are going to have a mildish kind of rally. And the market is going to spend more time in consolidation rather than in robust advances.
News. Dr. Narayan, before the break you were talking about the Bank Nifty, but there are two stocks, the biggest banks, SBI and ICICI, that have fallen 6 to 10% in the week gone by. Would you use this as an opportunity to trade into any of the banking stocks on the long side? And if yes, which ones would they be?
Well, I'm not going to step in there in front of a, speeding downward speeding train, and particularly in terms of ICICI Bank, there seems to be clearly some exit going on from some large holder, and you never know what kind of, inventory they are actually dumping. State Bank has been falling alongside the rest of the PSU banks. The results are still awaited. I believe they are somewhere later in this week. I think the market would want to watch the results of State Bank, and if that were to be along the lines of what we saw for PNB, Bank of Baroda, etc., that would probably sound a bit of a death knell for the banking sector for the shorter term. But having said that about the shorter term, I think the larger term seems to be as yet undisturbed in most of the stocks and sectors as well as the index. So this is clearly something that is of localized nature as a response to some localized events for the moment. So I think the market will step back and take a longer view, particularly the larger players. And we always speak about wanting to buy on decline. So, well, here is the market giving you an opportunity to buy on decline. Now, the opportune thing there would be to wait for the decline to complete or signs of that to emerge, and then subsequently venture forth, rather than try to time it down to the exact lows. So I would say wait for ICICI Bank or State Bank or whichever banking stock you are interested in, let it form a bottom, let it form a base, come out of that, and then we can buy. If it is going to continue higher, then there should be a lot of room, so no worries on not catching the bottom.
All right, Dr. Narayan, we'll leave it at that. Thank you very much for joining us and preparing us for what might be a tricky day of trade.